Financial mistakes to avoid in your 20s, 30s, and beyond. The age between 20 and 40 is so sensitive that you can easily build or ruin your financial future. If you choose wisely, you'll be set for life. However, if you choose poorly, you'll have to live with the consequences for the rest of your days. So even if we lack a crystal ball to look into the future, we can still avoid some common mistakes to make it better. Hello, and welcome to our channel. In today's video, we're going to talk about financial mistakes to avoid in your 20s and 30s. So stay with us until the end of the video, and let's get started. Being unprepared for emergencies. Living in the now and taking each day as it comes is one thing. Neglecting to plan for the future is quite another. But guess what? Life won't always be easy. There will be times in life when you'll need to use all of your resources to get out of a jam. So don't let situations like unexpected job loss, unanticipated auto repairs, or natural calamities take you off guard. Establish emergency fund money and you'll be happy to have it someday because it's financial insurance. Overspending. When you first start generating decent money, particularly when you're living paycheck to paycheck, you may feel tempted to treat yourself to things you've been wanting for a while. You begin sating all of your cravings and choosing whatever your budget will allow. However, you'll soon come to the realization that your wants never go away and that you need to be more frugal with your money. Do not wait to discover this lesson the difficult way. To prevent financial stress, establish a habit of spending within your means and giving priority to necessities. Postponing retirement savings. Young people often discount retirement savings as something they can do later. Then, after 10 years, you suddenly realize that you are becoming older and you hurry around desperately attempting to salvage the situation, but it doesn't help. Therefore, the sooner you begin saving for retirement, the less you'll need to save over time, because you'll have established a habit that is less of a chore and more of a strategy you look forward to doing. Spending without a budget. The breakdown of your income and expenses is your budget. It enables you to see your entire financial status in terms of liquid assets and aids in decision-making. Consider a budget as the ability to direct where your money goes rather than being left in the dark. This is because you'll never achieve financial stability if you never take charge of it. Taking on too much debt. Times can be difficult. There will be times in your life when you can hardly support yourself. You'll then need to take out loans to cover your urgent, necessary expenses. But you'll also need to figure out how to escape that disaster. If you don't, you'll have to deal with tension while your creditors pursue you, so only borrow money that you can afford to repay. Ignoring your credit score. Nowadays, obtaining a loan is simple thanks to the hundreds of microlending organizations that fill the void left by banks. Many young people risk harm to their credit score by taking out loans as though it were a game. However, they are unaware of the significance of having a high credit score. This is because your credit score can impact your ability to access credit and other financial opportunities, so it's important to monitor and improve it. Putting off insurance. It's simple to put off acquiring insurance when you're young, healthy, and only have a few obligations. However, insurance exists to shield you against any circumstances that may otherwise ruin your finances. Additionally, the more you delay this, the more expensive it gets. So decide to prioritize insurance as soon as you start earning money. Failing to diversify your income sources. Having just one source of funding for investments or income is another major mistake that many young adults make. They completely rely on one opportunity and never take the time to look for other ones, especially if it's a very lucrative chance like a well-paying job. But the sooner you realize this, the better off you'll be in life because there are so many chances available now thanks to the internet. So start diversifying your income as soon as possible. Finally, we can say that making wise financial decisions in your 20s and 30s can put you on the road to financial security, while making poor choices can cause stress and financial hardship for the rest of your life. Therefore, you can build a strong foundation for your financial future and have better peace of mind by avoiding these mistakes and establishing excellent financial habits early on. And this is it, guys. We hope you found this video informative. Don't forget to like and subscribe to our channel for more amazing videos. And thank you for watching.